Hello, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. And before I go any further, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As a reminder, the focus of my presentation and the focus of the Options with Doug chat channel and Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis to see how traders and market makers are positioned in the options market and how those positions change from day to day to help develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And I think this two-step process using the options market provides a significant edge for trading stocks and futures. Okay, and questions and comments are welcome. I will be watching the chat room in Discord as well as the chat in YouTube for questions and comments. So again, questions and comments are welcome and I'll try to answer. Okay, what I'm going to cover today, first go over the last of the economic data that came out this week, as well as the earnings that came out after the market yesterday, after the market closed. And then I want to do a trade review from yesterday. This is from Meta from yesterday. And then talk about our positional analysis for today. And then finally talk about some setups for today. So first of all, economic data. And there were several items that came out today. First of all, the employment situation at 8:30 a.m. Eastern Time came out much higher than expected at 517,000 versus forecast of 188,000 and the previous reading of 223,000. So there was probably a time not too long ago where a much better than expected number would have caused a sharp drop in the market, but not in the current environment of bullish sentiment. So the market pretty much shrugged it off, at least for the time being. And then at 9:45 a.m., the services PMI came in about in line with forecast, still less than 50, so in contraction. And at 10 a.m., the ISM services PMI at 55.2, higher than forecast and above 50, so in expansion. So that's the news. That's the end of the news for the week. And you can see how the market interpreted that data. And then yesterday, after the close, there were three big tech stocks that reported earnings, and they all were trading lower after reporting yesterday after the market closed. That was Apple, Amazon, and Google. And so far today, they've rallied with everything else. Okay, so the next thing that I want to talk about is a trade review from Meta for yesterday. And recall, Meta reported earnings after the close on Wednesday and then rallied pretty sharply on Thursday. So this is, I'm just going to show several screenshots. So this is Spotgamma Hero for the day, showing the combined signal. So this is showing that traders were primarily buying calls for most of the day. And as a stock trader, this is something that you definitely want to look for. This is a powerful force that can drive a stock a lot higher. So as traders were buying calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. So the stock buying was pretty much very strong in the morning, leveled off, and then strong in the afternoon. So that's what options traders were doing. And here's the setup in Bookmap. And notice so there was a little bit of a dip in the morning, and then notice all the green dots here coming in. Market buy orders, aggressive buyers coming in, and that continues all the way up to this 150 level at the first target. And then actually the order flow remains bullish. Again, looking at the green dots until about 11:45, something like that. Now price continues higher. Again, remember that traders were buying calls. So Dave says, I was bearish on Meta, dang it. Now this is yesterday. I'm doing a trade review from yesterday, and my bias for today was different. And I'll talk about, when I get to the setups, I'll talk about Meta today. So again, this is a trade review from yesterday. And the interesting thing about this, we'll get to it. So remember that Meta gapped up very sharply on Wednesday after the market closed when they reported earnings, and then continued to go much higher. And here's the entire day. And notice that Meta made it up to this 195 liquidity level, the second target. So the first target, well, actually the first target would have been the 185 liquidity, then the 190 liquidity, and finally the 195 liquidity. All of these pink dots coming in at that level, and price reverses lower. And there was also a good reason in the options market. So again, remember that, I don't know, Meta was trading up something like, I don't know, at least 25% higher yesterday from the previous day. So again, we're looking at Thursday. And notice again, the fall off around 195, 196. All right, so this is Equity Hub. This is Spotgamma Equity Hub. And notice, again, we're talking about the 195 level. This is the Spotgamma composite view. The orange or red shading, orange-red shading below 160 indicates put dominance. That means that at that level, traders are long puts and market makers are short puts. And above 160, traders are long calls. And again, market makers are selling those calls. But notice this vertical axis is this SG momentum indicator. And that is the rate of change of gamma, and it can be equated to volatility. And notice how it just drops off above 170, and the 195, 196 level is not even on this chart. Meta gapped up and moved up so much higher that it was completely off this chart. And so this indicates that that rate of change of gamma is quickly decreasing, and most likely, just this chart stops at 190, and this is at the, at a very low level, just continued lower. And there's another way of looking at this. This is another view of the same thing. And the orange line is call gamma, the blue line is put gamma, and notice that, and I wish there was a way to zoom in on this chart, so that the steepness of these lines is another indication of the rate of change of gamma. So I'm just going to draw a line around 195, and notice the steepness of the call gamma line starts to decrease. So that rate of change of gamma is decreasing, and also the call gamma is all way down here except for a little bit at this 200 strike. So Meta gapped up and continued higher past all this call gamma, and the rate of change of gamma was quickly decreasing, indicating there was no more hedging required as Meta started to approach this 200 level. So that is a good indication that 195, 196 was near the top end of the range. Again, looking at the rate of change of call gamma decreasing sharply, all the call gamma down below, and notice that at that level, and this is what this is showing. This is the hero for the entire day yesterday, and I took this screenshot this morning. So hero allows you to go back for the okay, so there's a message in Discord, not getting sound. Can anybody else hear me? If somebody would indicate in YouTube and Discord. Okay, Trader HE says sound good. Okay, so I'm getting indication in YouTube and in Discord that my sound is good. So let me just type him a quick message. Okay, so again, notice that we're at that level of greatly diminishing gamma, and hero turns down slightly and price drops, and those, again, that gamma was decreasing. Hero started to turn over and price reversed lower. So that was a good indication that was a top. And their traders were not doing much with puts. It was mainly driven by calls. And again, that slight drop off in calls was all that was needed for price to move lower. Okay, I think that's, let me just do a quick check. Yeah, that's all I had for this example. So Meta has been very interesting this week, and I'll talk about the setup today. Okay, so let's talk about our positional analysis now. And I'm going to go to Bookmap. I'm going to go, let's start with the S&P 500 and talk about the levels in play. And normally I take a look at the Thinkorswim charts, but the script, Bookmap script for Thinkorswim was apparently not updated today for SPX. So I'm just going to stick with Bookmap here. And so this is the levels in play. And these levels for SPX are shown in this Spotgamma Cloud Notes column. And this is showing combo levels combining SPY and SPX, shown here and here. And then this L2 4150 is the SPX 4150 level, and that's an L2 level, and a gamma L2 level, 1 being the highest, 5 being the lowest. So it's a pretty important level, and it's also a big round SPX number. And so these are my Spotgamma Cloud Notes provided to Spotgamma subscribers and updated automatically every day. And these levels are off a little bit now. The last time I looked, the SPX ES difference was about 12 points, and Spotgamma is still using a 15-point difference. So they should be a little bit lower. So this combo L3 level did act as resistance today. And SPX chopped around that level for quite a while and then is now moving lower. And then this column, this C levels column, these are my cloud notes, and I'm showing the Spotgamma resistance, support, and pivot levels here in this case, and also the key the key SPY levels. So this is the 14 level, and that was also noted as a pivot, with 410 as support, 420 as resistance, and 415 as a pivot. So now ES, SPX, and SPY are both trading below that pivot level. And then the other thing that I note is this is the upper edge of the expected move for ES for the week. And then this is the big round number, 4150. I marked the ES 0s and 50 levels. So those are the levels in play today. And now we'll talk about shifts in levels, and there were pretty significant shifts higher in levels. So first of all, for SPX, both the SPY and SPX put walls for the S&P 500, both the SPX and SPY put wall shifted higher. Yesterday, the SPX put wall was at 3,800, and it shifted all the way up to 4,000. And then yesterday, the SPY put wall was at 390, and it shifted up to 400. So that's the put walls, both shifted higher, as well as the call wall. So for SPX, the call wall yesterday was 4150, shifted up to 4200 today. So we can see that up above. There's the 4200 call wall. And the 4,000 put wall is well below. And then for SPY, the call wall shifted up from 415 to 420. And then also for SPY, the key gamma strike shifted higher from 410 to 420. So in the last 3 days, the SPY key gamma strike is shifted higher from 400 to 410 to 420 today. And just to define what these levels are, the put wall is the strike with the largest net negative gamma, and that can be expected to act as support. And the call wall is a strike with the largest net positive gamma, and that can be expected to act as resistance. And then the key gamma strike, or the absolute gamma strike, with a strike, that's the strike with the largest absolute gamma. Alright, for QQQ, the volatility trigger shifted higher, and also the key gamma strike shifted higher from 300 to 310. So in the last 3 days for QQQ, the key gamma strike has shifted higher from 290 on Wednesday to 300 yesterday to 310 today. And let's take a look at the gamma charts now, absolute gamma charts, just to see what that looks like. So here's SPX. And here is so these are the absolute gamma strikes. I'm looking at, here's the zero line. I'm looking at call gamma or positive gamma above that line. That's shown by the black lines. And put gamma or negative gamma below that line, the zero line, and that's shown with the teal bars. So here's the 4,000 key gamma strike, still remains at 4,000, but the thing to note about this chart here is all the build of call gamma above that level up to the 4,200 call wall level. Okay, so put wall is at 4,000, and that's also the key gamma strike, and that's pretty obvious, the strike with the largest absolute gamma. And then there's the 4,200 call wall, and again the strike with the largest net positive gamma. So that's SPX. And again, the thing of significance here is the shifts higher in the levels and the build of call gamma above the 4,000 level. And here's SPY. So SPY, the put wall is now at 400. And 420 is the key gamma strike as well as the call wall. And again, the thing to notice is this build and call gamma, especially above 410. So the shifts higher in levels and the build of call gamma. So that is the S&P 500. Let's go take a look at the NASDAQ now. And I just look at QQQ. NDX is pretty much insignificant as far as the options market goes. So 310 here is the call wall and the key gamma strike. And the put wall remains at 285. There's the 300 level. And again, 310 is the call wall and the call wall and the key gamma strike. So again, the thing to note is the build of call gamma here. Okay, let's take a look at the data. This is from the Spotgamma AM Founders Note. And as usual, I'm going to look at the gamma notional. And this is market makers' position on the gamma curve. And over time, what has been happening is market makers' gamma notional has shifted from negative to gradually more positive. And that's pretty much a bullish indication. But from a trading perspective, what it means is, from a trading perspective, what it means is when market makers' gamma notional is negative, that means that traders are long puts, market makers are short puts, and they have to sell futures as price decreases to hedge their delta exposure, and when price increases, they can buy back those short futures. And it works just the other way around. In a positive gamma environment, that means that traders are short calls, market makers are long calls, and they have to sell futures as price increases to hedge their delta exposure, and then they can buy futures as price decreases to hedge their delta exposure. And that's in a positive gamma environment, like the current environment. So right now, SPX, shown in the left column here, the market maker's gamma notional is 545, and that increased slightly from yesterday. SPX yesterday, gamma notional was a positive 459 and has shifted to a positive 545. Yesterday, SPY was minus 437, and it's still negative, but just mildly so at minus 174. And then QQQ has shifted from a slightly positive 18 yesterday to 236. So this is a, for SPX and QQQ, definitely a positive gamma environment. And I'd say close to neutral for SPY, but when you combine SPY and SPX, I would call that neutral to positive gamma. So again, this means in a positive gamma environment, market makers are trading against price to hedge their delta exposure. And this is illustrated with these Vanna model charts. And this is for SPX. And what this is showing as price increases, the strike is on the horizontal axis, market makers delta notional, or delta exposure is on the vertical axis, and as price increases, market makers delta notional increases, and they have to sell futures to hedge their delta exposure. And the green line shows how that delta notional changes with changes in implied volatility, and that's the current expiration, and that shows the Vanna effect, which is the change in delta with a change in implied volatility. And the black line is next expiration, and that's showing how market makers delta notional changes as time passes, and that's the charm effect, the change in delta as time passes, change in time. So that's SPX. SPY, just slightly skewed to the left, and then QQQ somewhere in between, but definitely still skewed upward from left to right. So, again, a positive gamma environment. So finally, let's take a look at my key gamma strike list. What I do is I track the key gamma strike for every stock in my watch list, and I track how these change from day to day, and I color code them. I compare the current key gamma strike that's shown in the D column with the previous key gamma strike in the E column, and that is from the previous day. And I color code these green, indicating that the key gamma strike increased from the previous day. So notice all the increases here. This is definitely bullish. Very, very bullish to see all of this. All this green, all these increases in the key gamma strike. So that indicates that traders are positioning for higher prices. They're accepting higher prices. They're expecting higher prices, and they're they're trading like that. That's how they're positioned. So my thesis for the day overall was bullish. I was first of all, that was based on the building call gamma and the increase in levels both in the indices as well as the stocks, and then also looking for lower volatility. Again, noting that the market makers would be generally trading against price. So that is the broad market view. Okay, let's take a look at some setups now. And I did have some different thesis for several stocks, just based on the amount of gamma that was expiring today. And there were some questions this morning, or some comments in Discord about that. And just a quick comment before we start taking a look at setups is, for indices like SPX, I really only pay attention to the amount of gamma expiring on a monthly expiration. And for stocks, like we'll see with several of the stocks in my watch list, I will take a look at that every week. And it seems like this cycle of buying calls in stocks at the beginning of the week, during the week, that expire at the end of the week. So remember, most stocks have a weekly expiration, whereas SPX has a daily expiration. So traders will buy those Friday expiration calls during the week, and as those calls get closer to expiration, if traders don't continue to buy those calls, they can lose value pretty quickly, and market makers can sell their long hedges. Their delta exposure decreases, and they no longer need those long stock hedges. Now, but again, that's for stocks. That's especially for higher volatility stocks, a lot of meme stocks. But for indices, again, I'm only looking at that percent gamma expiring at the monthly expirations. And based on whether the index is call dominated or put dominated, I'll make a decision about my bias then. But typically, especially for the last year, most expirations have been put dominated, and that's what leads to a lot of put vanna rallies. Those puts expire, market makers are short puts, and they can buy back their short hedges as price increases, implied volatility drops, and your delta exposure decreases. So again, that's for an index like SPX, only at monthly expirations. All right, so let's take a look at some setups now. And the first is Apple. And recall, Apple reported earnings after the close yesterday, and initially traded lower after the close yesterday. But traders didn't want any of that today. They were bullish, at least in the morning. So let's go take a look at Bookmap now. We'll go to Apple. So here's Apple in the morning, and a pretty sharp rally, just like many other stocks, just right after the open, shot up higher. And again, as traders were buying calls, and with our primary target here at the 155 call wall, and the liquidity there. Let's go back and take a look at Hero. And so I've separated out puts and calls here. Calls are shown with the orange line, puts with the blue line. So in the morning, traders were buying calls, and they were buying puts as well. And it looks like they continue to do so. So price was increasing until traders stopped buying calls. Then it has kind of leveled off and chopped up and down, a little bit down. Let's take a look at the total signal. And net effect is bearish. So good long setup in the morning with traders buying calls, market makers selling the calls and buying Apple stock to hedge their delta exposure. All right, so here's AMD. And recall, AMD reported earnings after the close on Tuesday, I believe, and has been up pretty sharply since then. And let's take a look at puts and calls. And what I was looking for here was any dip in the call line. I'm going to zoom in on the morning. I was looking for any dip in the call line for a short. So traders have been buying calls in AMD all week and looking for any potential short, and I'll show you why. Let's go to Equity Hub. So what I've done here is sort these stocks by this next gamma expiry. So this shows the amount of gamma expiring. And this is showing the date of that expiration. So notice the stocks in the upper half of this list. This top gamma expiry is today. That's February 3rd. So Meta's at the top of the list, and we'll look at this. And typically, any number over 30% is significant, but 26% for AMD was close enough. And this doesn't always work out, but again, given the strong move higher in AMD this week and the amount of call gamma expiring at the end of the day today, and noting that any time that there was a let up in that call buying, that market makers would be able to sell their long hedges since their delta exposure was increasing. I was looking for a potential short in AMD. So let's go take a look at Bookmap now. So just like everything else, there was a strong rally in the morning, and then price started to reverse lower. There were several short setups, this trend break, and then another trend break. And now price is falling. And let's go back and take a look at Hero. Take a look at the total signal. And pretty choppy. So not the best example, but again, that was what I was looking for. Here's Amazon. And really you have to take each stock individually. Let's take a look at puts and calls. So I was looking at a couple setups here, call divergence, long setups, traders buying calls. There's the first, there's the second. This one's better. So let's go take a look at Bookmap now. Here's Amazon. Here are the couple longs in the morning, and then Amazon is rolling over as well. And notice the shift in order flow here. All the pink dots coming in and CVD dropping sharply lower as the aggressive sellers start selling Amazon. So call divergence setup in the morning. Let's go take a look at Hero again and see what's going on in the afternoon. Shift back to the total signal. And here finally, Hero shifts lower. Take one last look at the total signal. And that doesn't help too much. Separating it out puts and calls, so the total signal tells a better story. All right, the S&P 500, and we'll look at ES, and this is the combined signal for SPX and SPY for the ES futures. And what I saw was, first of all, call divergence long in the morning. And during that time, traders were buying puts as well, but they were buying calls, and that seemed to be driving in the morning. And if you weren't fast enough to get it on this straight line in the morning, straight line up, here was a pullback set up as traders continue to buy calls. And we'll take a look at the SPY chart to see that. So that was the call divergence long in the morning. And I'm going to go back to the total signal, update that. And then looking at the This is definitely a kind of a longer term divergent short. So let's go take a look at, I'm going to look at SPY in Hero, or in Bookmap. And remember, I'm looking at ES and SPY. You can look at the same thing. It's just sometimes a little bit easier to see in SPY. There's less clutter. So again, we noted that 4174 SPX 4174 as resistance, and there, this is showing falling CVD, pretty bearish order flow. You can just tell by all the pink dots there. And there's the break lower. Somewhere between, somewhere around 1245. And it took a while. We'll take a look at it, ES. All right, there are a couple of questions in YouTube. Hi JC, at what time do you check this call put divergence? And I just watch it during the day. It's just, you can't, something like that you can't necessarily time. You just have to keep an eye on it. What time do I make a trading decision? I usually wait 10-15 minutes after the open. For me, for example, I'm going to zoom in on ES. And I'm not the fastest trader in the world. There are others that are faster, that can trade the open. And for me, this was the first really good clean entry. This series of lower highs, the final retest of the 4150 level, and then you can see the green dots coming in here just around 10:15. So a break of this was the first clean entry that was for me, for my style of trading. So that was 45 minutes after the open. And again, I just don't feel comfortable jumping in on a straight line like this. That's just me. Okay, and there's another question, another comment, and Maharaja made small money based on Meta. Great, and too bad. Yeah, I exited too soon as well. So, but yeah, that was my plan, to look for a short in Meta. So anyway, that's the long setup in ES and SPY here. And after a strong week like this, I was primarily looking at shorting stocks like Meta. So let's look at Google, then let's just go on to Meta. Time is getting a little bit short here. So let's go on to Meta.
Sorry, I don't understand.
Okay, to set this up, so remember we looked at Meta from Thursday, and it had already gapped up pretty significantly from Wednesday afternoon and got up above that, all that levels, all the call gamma. And JC asked, do I make a decision based on VPOC shifts up or down? No, I don't. I look at it, but it's not something that's in my decision process. So let's take a look at Meta. Let's go take a look at Equity Hub. And this is Meta. So Meta is at the next to the top of the list here. With 32.9% gamma expiring today. So anything, like I said, anything over 30% is pretty significant. It's something that I want to pay attention to. All right, so that's the initial setup. Looking at that, anticipating that Meta has been so strong that any hint of Hero falling and those calls would quickly lose value as this afternoon expiration approaches. So again, these are calls that expire at the end of the day. So we see that Meta, let's go take a look, is definitely call dominated. Here, this is showing above 162, all call dominated, all in the green region. So traders are long calls, and that's obvious. They've been buying calls since yesterday morning, and potentially on Wednesday in anticipation of earnings. And those calls again expire today. So any hint of those calls expiring, and I'm going to look for short. So let's go take a look at Meta and Hero now. So there's the total signal. And I'm looking at this call signal. Let's see if we can get any more clarity with the 30-minute look back period. And not really. So looking for any dip in the signal for a short. There's the first little dip, and there it goes. And now it's continuing lower. So I was just looking for shorts in Meta. Let's go back and take a look at Bookmap now. I'm going to zoom in. So yeah, there was a bullish signal first thing in the morning. If you were fast enough to get in on this straight line up, here's one pullback. I was anticipating a short, and there's the break at 195, which was close to the high from yesterday. And then price moves lower as those calls, traders started selling the calls. Those calls are losing value, and market makers selling their short hedges. So there's the first short, worth about 5 points, and then the next short worth 3 or 4 points. It looks like Meta continues lower. Let's go take a look at Hero again. Take a look at the total signal. And continues to be bearish, negative delta. And the next stock that I want to take a look at Oh, one other thing that I wanted to point out for Meta was this note here. Over on the right of this put call impact chart, Meta has 32.9% of its gamma expiring this Friday. We could see a reversal in the stock. Look for support at 180. And that same note was on, same type of note on AMD. 26.6 gamma expiring. We could see a reversal in stock. Look for support at 70. And actually, let's take a look at one other stock on this list, and then we'll wrap it up with Tesla. So there's Snowflake, 26% gamma expiring today. There's the same note. Could see a big reversal on the stock reverse after expiration, and notice the call dominance. Above this pivot line here at 175. Let's just go take a look at Hero real quick for Snowflake. And here's Microsoft. I wanted to point out a short there. I'm about out of time. Snowflake currently trading below that, but bearish. Negative delta, both calls and puts. So another good short today. And then we'll wrap it up with Tesla. That'll look at any final questions. So here's Tesla. Let's take a look at Equity Hub. Tesla. So notice in this list are mostly stocks that pretty actively trade options that have been very active this week. Especially Snowflake and Tesla are pretty volatile stocks that probably have a large or significant amount of gamma expiring at the end of every week. And so here's Tesla, 26% gamma expiring today. Let's go to the put and call impact chart. And another note about a reversal in the stock. Look for support at 100, which is way down. So, all right, so let's take a look at Hero now for Tesla. And strong correlation in the morning. You know, certainly that was a good long setup in the morning. Calls are driving. Long setup. Call buyers start selling their calls, and prices reversing lower, and they continue to buy puts. And we'll take a look at Bookmap now. So long setup in the morning if you were fast enough to catch that. Let's just take a look at cumulative volume delta here. So it looks like order flow has been bearish. Really started shifting more bearish here. Notice all the pink dots up here. Traders start selling their calls and price breaks below this 195 level. All right, let me check for questions. All right, so JC asks, what are your thoughts about profit taking or risk management, and how do you deal with that since trading options is way different than trading futures? Yes, it is. So I'm just showing for each of these, I'm just showing potential setups with the underlying, and there are any number of ways of taking these trades, and I'm not specifically saying trade shares, trade options, trade futures. For the S&P 500, for example, you can buy or sell SPX calls or puts, SPY calls or puts, SPY shares, or ES futures. And the way that I approach that is futures, I'm going to get it in and out pretty quickly, with a highly leveraged instrument like that. With options, the idea is buy and hold for the day. So if you want to buy a call, buy a put, I would try and hold on to that as long as possible. So coin, yes. There's a question, could you have been short coin as well? And gamma expiry, that was at the top of the list. Let's just take a look at Hero. The reason I didn't mention coin, I don't have it on my main computer here, and I knew I had a lot to cover, so I didn't plan on jumping over to my other computer. So let's just take a look at Hero for coin. Coinbase. And this is another reason. Coinbase charts have been pretty difficult to read because of the block trades coming in. So you have to zoom to a level where that block trade is no longer in the picture. And that doesn't help. So the Coinbase charts have been like that recently. All right, another question. There's a question, do you know why Tesla has been mirroring ES for the last couple of weeks? Usually it goes its own way without ES affecting it as much. Remember, Tesla is a component of ES, or the S&P 500, not the other way around. So it may be volatile enough that it is helping to drive price action in the S&P 500. But I hadn't noticed that I haven't thought about that. But again, remember that the S&P 500 is an index of stocks, and Tesla could be, it's not a large market cap component anymore, but it's certainly volatile. And so Roomba, I guess you're talking still about Tesla through me today. Expect a reversal after short run up. So I wait and confirm anything that any thesis that I have, any expectation, I confirm that with hedging flow and order flow. So remember, in Meta, I was waiting for that definitive turn lower in Hero, as well as order flow and Bookmap to confirm. And Roomba, if you, I'd say give Bookmap a try. Instead of looking at candlesticks charts, you may I expect you'll gain a lot more insight from looking at Bookmap rather than a candlestick chart. And Viney asked, how far do you suggest should I go hold the option for the day? Well, first of all, if you're buying and selling options, if you want the most bang for your buck, you buy the 0 DTE. So again, remember for stocks, if you're trading stocks, there's typically just a weekly expiration. So if you want to trade Apple on Monday with options and you want to buy or sell calls, you're going to have to buy the calls or puts that expire that Friday. Now, if you're trading SPY or QQQ, those instruments, those ETFs have options that expire every day now. So for SPY, you can buy the 0 DTE any day of the week. And if you're buying and selling options and want the most bang for your buck, that's where you need to go with the 0 DTE. You're going to get the most gamma that way, the highest change in delta with a change in price. And then as far as holding, how far you hold, you would want to set a price target for every trade that you take. And should you suggest shorting options as it has more probability to win or long? So it depends on your time frame. I would be hesitant to sell 0 DTE options. You're just taking a lot of risk for a little bit of reward. If I sell options, I go further out in time. I know Tasty Trade, Tasty Live now now they call themselves, for example, they suggest 45 days to expiration, and they mostly talk about premium selling short and long. So if I'm selling options, I want to go further out in time. It's a higher probability. I give myself more time to be right. If I'm buying options, I want to buy the shortest time frame possible, just to get the most bang for the least amount of risk. All right, so JTT confirms that, yes. So if you're selling options, look for further out in time. And for a while, I was selling options that were far out in time, like 100 days plus, and they actually expire they lose value very quickly. That's why. But now with skew being so low, there's not as much advantage to doing that now. So anyway, that's that's my thought on that. So buying or selling short time frames, buying calls and puts short time frame, selling further out in time. And yes, selling does require a lot of capital. And just a suggestion, if you do have a smaller account and want to sell options, you may take a look at either futures or micro futures, and especially if you have a small account or just starting out, micro futures. The margin requirements are governed by a totally different body and are closer to portfolio margin in an equity account. So the margin is a lot less for selling and selling futures, options on futures, rather than options on stocks or ETFs. So just something to consider. Okay, my time is up. I think I've answered all the questions, and it's been a great week, a great trading week, and I think it definitely lived up to expectations with all the earnings, FOMC announcement, data today. It's been a great week, and everybody, thanks for watching. Thanks for your questions and comments, and I will see you on Monday. Thanks again. Bye.